I'm Charlotte McLeod with investingnews.com, and here today with me is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Thank you so much for being here. Great to have you back as always.
Thanks for having me, Charlotte. Yeah, always a pleasure.
Of course. And we're catching up from our last conversation all the way back at the beginning of the year. So we've got a lot of ground to cover today. I thought we could, of course, start with gold. So it's been a pretty interesting 2026 with the run up in January, then the pullback. Now it feels like we're moving sideways. I wonder if we could take a quick look back. And for you, were there any big surprises in gold's performance this year, or does it make sense from a technical perspective?
Yeah, I mean, gold's doing pretty much what you and I had talked about back in January. I think it was at the VRIC, which I was expecting a significant pullback in the precious metal space. We are kind of in a euphoric, overexcited mode, and usually the market pulls back from there. And so we have seen that, and that's a good thing. We can take a look at the charts, and you can see here the chart of gold. And when we take a look at gold, and this is zooming back all the way to 2020, it's had a beautiful run up and it's had a big pullback. Now, this to me is in the long picture, this is still a very bullish sign. I think precious metals, as most followers here believe, is going a whole lot higher. But I do think there is a little bit more potential downside pain in this space, which I think is an opportunity. So what I think could happen is I think we could see precious metals potentially go into a fairly steep meltdown and potentially unwind to about $3,600 per ounce going forward. Now, using Fibonacci technical analysis, we can get a gauge of the most recent leg to the downside, which was the sell-off that we saw back in here in February, March. We had the bounce, and this tells us where there's two downside targets for gold. So gold should, if it starts to break down here, is going to probably run to about 4,100. It's probably going to find a bit of a bounce because it is also a previous low. Plus, it's a Fibonacci 618 extension. This is called the golden ratio. It's just where momentum tends to run out of steam temporarily. And if we do see price come down and bounce from here, we almost always see price come down to this 100% measured move, which is around that 3,600. So this is a pretty good unwinding event in gold. It will bring price right back down to this breakout level just as gold and silver both went into this euphoric parabolic move. Pretty much anybody who wasn't in the precious metal space who piled in at that point simply because of FOMO. Everybody's making money. It's moving up. You got to get into it. The market is very efficient. It always has a way to try to get anybody who's kind of late to the game, buying on emotion and FOMO, to then have to suffer the stock market roller coaster ride. And it's going to try and shake them out. And if it doesn't shake them out through this, it is going to do what the market is very good at doing, which is potentially waiting them out and taking a long time. And so that is where we're at right now. When we look at this chart of gold and we zoom back, go back to 2020 more or less, this is what gold pretty much did the last time we saw a very significant run up. It pulled back. It tried to shake the market out. It came even lower later down in early 2022, 2023. But it actually took several years. If you didn't get shaken out, you gave up on it. I mean, nobody wants to sit in something for 4 years without it moving, or not at least emotional traders who need action. And so the market will shake you out, wait you out. And that's where we're coming into gold here. That's the big question. And we have mixed signals, and this is across the board for precious metals, for gold, silver, platinum, palladium, and the mining stocks. We've got this long-term moving average, 150-day moving average, sloping up and pushing higher. That is a very good gauge of what price is doing. So the long-term trend of gold is up, but the short-term trend and price action is down and bearish. And so we have this mixed signal. So really, we just have to let gold figure out what it's going to do. Is it going to stabilize and start to run higher? Or is it going to trade sideways? Or are we going to see a deeper cleanse and a correction, which would actually be very bullish? And then it would go and take off for another potentially 5 or 10 years with some huge moves. Either way, I think it's going to end up to the upside, but it might take time, and there still might be quite a bit of pain to the downside for those investors. I mean, we could still see gold fall roughly 20+%, which is pretty big in the big picture of things.
Okay, so long-term gold's still looking good. It's the short-term here that is feeling uncertain. And it sounds like, so we could go in either of those three directions moving forward at this point in the short term. What signals might you be looking for to give you an indication of which one of those gold is going to take in the short term? Maybe as we're looking at the summer here, I think a lot of people are wondering, how is the summer going to look for gold?
Yeah, well, seasonality, let's step back. So precious metals have been moving with the equities markets pretty closely. If there's a big rally in stocks, we see a big move up in gold and silver. If there's a big sell-off in equities, gold and silver move down. Now, that's not the norm, but that's the way they have been moving majority of the time for this year. We are coming seasonality wise, sell in May and go away. If you look at the seasonality chart, this is where the markets start to sell off. Not so much sell off, but they don't have a lot of buying pressure until the end of October. So stocks naturally want to drift and kind of be out of favor. Seasonality wise for gold is the same thing. This is actually a time where gold falls out of favor until usually about October. So we have two bit of a headwinds for that. When we look at the chart, there's another major headwind that is starting to come together here, which if we look at the dollar chart, the dollar has been selling off over the past more or less year and a half, 2 years. It's been basing out and it is starting to push higher. It actually looks like it's heading for this $100 mark. If it starts to break through there, that means we're probably seeing equities sell off in a big way. We're probably also going to see precious metals start to sell off. So this is a really big indicator. The dollar's been trading sideways for a long time. But if it starts to break out and starts to push higher, then we're definitely going to probably see gold sell off. Now, the short-term chart for the dollar is actually very bullish. We got this bull flag pattern. It's actually starting to break out and run as if you and I are speaking today. And it is pointing to it coming right back up into this resistance level, these previous highs. And so the big question is, like, does it get rejected there? If it breaks out, then precious metals are probably going to go for a much larger sell-off. And the charts for gold, silver, platinum, and palladium all have bearish looking charts from a short-term standpoint. Sentiment is pretty bearish. People aren't interested in precious metals right now. The silver chart, we'll get to that, but you can see it in the volume. So the dollar is a very big player of what is, I think, going to happen in the precious metals space. So if the dollar goes up, stock market starts to sell off. Those are the two biggest headwinds, I think, that are going to pull precious metals lower versus act as a safe haven play, which naturally you think they would, but they haven't been acting that way for quite a while.
Yeah, I think the way that precious metals have been acting has been a little bit surprising for investors this year. And maybe we can take a little bit of a closer look at silver. We talked about 3,600 being that low level potentially for gold. What is that level looking like when it comes to silver?
Yeah, so silver has a slightly different chart pattern. It's still playing within the initial big sell-off. Gold had the initial big sell-off and it hit the downside targets and measured moves and put in a bounce. Well, silver has moved a little differently. It's still running on the initial drop and this bounce. And so when we look at where silver potentially could go, it is telling us it should come back down to the lows that we saw in March, which is around $62 per ounce. And then from there, the next stop is around $40 per ounce. And of course, that brings us right back to this level, just like in gold, just as silver, went parabolic and shot straight up. So again, the market is trying to shake and wait out investors. It got overexposed, overbought, just people piled in and drove the price up too quickly. And now it's coming back and correcting. And really this, both for gold and silver, this is a very bullish chart pattern long-term. As a long-term investor, you've got a pullback, we've got this bounce, and then you come down, and this is called an ABC correction. And gold has got the same pattern. And after that, this points to much higher pricing. Now, the flip side of that, Charlotte, is if gold and silver were to get traction, and say they start turning up right here, they actually have a very strong chart pattern. Silver is pointing to $175 per ounce. So what we do, or how the way I navigate the markets, is when there's an uptrend on one time frame, a downtrend on another, you get these mixed signals. When there's a mixed signal, I'm not interested in taking part. I want to get involved when the train's leaving the station and I know which way it's going. So right now we're in this wait and see. If silver starts to break out and starts to run higher, we can get back in and catch that euphoric, that next huge parabolic move up to 175. If it starts to break down, I'm not looking to bet against precious metals, but I'll be looking to pick up precious metals if it has a big cleanse to the downside and then play the longer term move to the upside. So both gold and silver have really good upside potential. Right now, it's just neutral, or there is no clear direction of which way it wants to go. And gold's upside target is $8,600 per ounce. So again, the question is, which way are they going to break? Everybody always wants an answer, but the reality is nobody knows where it's going. And the charts are giving mixed signals. So we just have to wait and see, let this play out. And I mean, in a perfect world, what I would like to see is for metals to have this cleanse, this big move. We exited silver at 111. We exited gold at about 5,100. And the plan is to either buy it at a much lower price or to buy it later, potentially, who knows when later, when it starts to move up so we can get back in. What I want to avoid is gold and silver going dormant for a year or 4 before it starts to run higher. And that happens over and over again. And that's a lot of wasted time. You can make a lot of money in return on your account every year, but it has to be in something that actually generates cash flow, pays dividends, or is moving in the direction you want. And so precious metals are just dormant right now. And we just have to wait to see which way they're going to go.
That all makes sense to me. And I think you answered my next question a little bit already. I was going to ask, where are we in this overall bull cycle for gold and silver? I think those higher price targets show us that we still have a lot further to go potentially. But if we look at it maybe in the baseball inning situation, where would you place us?
Yeah, I mean, when we look at the big picture, I would say this move here would be like the halfway point. So kind of if we go back, we look at this last major low back over here in the early 2000s for gold. It ran up. It had its correction, which is the halfway point, and then it shot up and had the next parabolic move. I feel like that's kind of where we're at. I think this is the first big ramp up. We're now having this big correction area. It's going to figure itself out, and then I think we're going to shoot higher, and it's going to last for many years. So to me, this is the halfway point of the game. Doesn't mean it's halfway time wise. I don't know how long the next portion will play out, how long it'll take before it starts to move higher and how long it'll go. But overall, I feel like this is something you and I had talked about even last year. Is I believe we're coming into this pullback and correction is going to be very similar to 2008. We're going to see a very sharp correction, and we're going to see equities, which we haven't seen equities sell off yet. But I do think we're going to see both of them have a very sharp correction together. And then after that, we're going to see everything go parabolic and take off to the upside. So we're really just letting these multi-year major super cycles play out. And we're in this middle of the game right now. The problem is, we got to wait. These are big patterns. They don't happen overnight. They take generally years to unfold. So that's where we're at. This chart here is the monthly chart. And when you look at it from that perspective, I mean, last time we got into this, it took a couple years before gold really broke and or silver and gold started to break and run higher. And we could easily see that when we look at this chart, we could easily see gold and silver trade sideways for a couple of years, build a launch pad, and then start to, take off and run higher, just like it did previously. And so that's what I think a lot of investors don't pay attention to the time being wasted in certain assets. Like, it's easy to fall in love with something and then you hold it, right? But if it's not generating, or the whole point of investing is to generate return generally. And so if I'm invested in something, I want it working for me. And so the scenario we have now is, we've seen this happen time and time again. It could go dormant for 2, 3, 4, 5 years. And so I want to just make sure when my money's at risk, it better be making me something. I don't want it to just sit there without any real return and just carry risk. So that is where I separate kind of how I invest versus others. I only love assets when they're moving and I'm in them, and I could care less if they're not moving. I'll just step aside and go somewhere else. And that's my whole philosophy. I use asset revesting, which is just reinvesting into whichever asset is moving and generating return or opportunity. If it's not, I protect my capital and I go somewhere else. And so I'm not committed to any specific asset class. I used to be a major gold bug. I still am, but I don't fall in love and hold on to things. I have no problem closing out a trade, and I can always buy it back later for a click of a button. So I don't get concerned about that.
Fair enough. I think that makes a lot of sense and good to understand your strategy. I've got one more question on the gold and silver side before we move on to other topics. I know usually when we talk about gold, silver, and miners as a group. But lately, I've been hearing in terms of the miners, people saying, even if the prices don't move higher, even if they go lower, they're still so historically high that the miners are making a lot of money. So I wonder if when you look at this, is there a chance to see the gold and silver mining companies outperform the metals themselves right now?
I think they're going to struggle. And, I remember you and I talking a long time ago, if I was just flip back to silver chart, I believe we're still going to have a little bit more weakness in the precious metals space. We're going to see a sell-off. I think miners are going to get hit fairly hard. But after we have this one more leg down in silver, potentially down to like 40, and gold pulls back, and miners are going to pull back as well. After that pullback, and this is what I've been waiting, it feels like forever for, is for this new leg of the super cycle in gold. I think it's going to be, gold will be the boring play. You definitely will want to be into the miners. I think miners are going to become very, very exciting, huge moves where they outperform and they just go absolutely ludicrous. So that's what I've been waiting for, is this particular setup that is slowly evolving, and it takes years to unfold. So going back to miners, I think if the stock market and metals pull back, I think they're going to get hit very hard, unfortunately. First of all, if the stock market goes down, you have to look at the stock market like the ocean tide. When the tide goes down, all boats go down. The stock market is the same. Gold mining stocks are stocks stuck in that tide, right? So there's naturally always going to be selling pressure. On top of it, we'll probably see the dollar rallying. We'll see gold and silver probably selling off. So none of this stuff bodes well. Do I think they'll outperform? No, they'll probably drop faster. Silver might drop more than miners. It's very volatile as well. But I think miners are going to be a great opportunity. If we were to look at this monthly chart of miners, and I to just kind of roughly draw kind of what I'm thinking would unfold, is we eventually see another sharp drop to the downside, and then miners really struggle for a while and build some type of base over time, and eventually they start to claw their way back in rally. But again, that could actually still take a few years to unfold, just like we've seen in the past. After these type of moves, it can really drag out. So I think miners are going to be great. I think metals will be great long term, but it also means, if you're going to sit in those positions, it might be a long time before you actually see any real growth, real returns above previous highs.
Well, and let's talk a little bit more about that overall stock market pullback. I know you've been looking for a significant drawdown for quite some time right now. And as you mentioned, these things can take longer than we expect to play out. But what's been allowing that to be pushed off? What's going on there? I think a lot of people are curious because they feel that this can't go on forever.
Yeah, well, there's no doubt we've got the AI, the big tech, just driving this market up. It's the monthly chart, but I'm going to drop back to the daily here. We're seeing obviously big tech doing pretty much all the heavy lifting. It's just been running and pushing higher. We have bad news. We have wars going on. We got the Middle East stuff, bad news happening there, but there's so much optimism in semiconductors and the memory stock space and just technology in general. Bad news hits the market, but the tech just dragged the stocks up through the bad news and still closed positive on most days. So we're definitely in a market that is very sector driven. Most of the gains are really from the tech space. And the other day we saw almost every single major sector was sharply lower, but only energy and the technology space sectors were up, and the markets closed positive, even though everything else was falling, right? So that is just how powerful they are. That is a sign of sector rotation. It's a sign of, one pocket is really doing all the heavy lifting, and it's going to, it's a very sensitive space. I'm just waiting for a bad piece of news in the AI space to buckle, and we'll see the NASDAQ and the tech sector and all of the stocks related to all that have a very sharp drop. We're definitely in this kind of nosebleed territory where a piece of bad news is going to hit the space and we're going to see a lot of selling. In fact, a good visual of this is kind of look at the software space. So just a few months ago at the kind of beginning of the year, Claude came out and everybody was talking about how the software space is toast. Claude will now start just creating everything. It's going to replace jobs, and the software space just completely collapsed. And now it has recovered. It's back up. But I think we're going to see the same thing in the AI space. We're going to see some bad news. We're probably going to see a big bout of selling. There's a lot of momentum traders in this market right now. So once it starts to sell off and starts to continue to go lower, it does create a waterfall sell-off where it's just a ramp up of volume and selling, and people just start getting stops and margin calls and all of this stuff, and they get out. And so we're in a really volatile space. And, I like to look through the market through a bit different lens. One of the best ways here is, this is a chart of my strategy. So on the left here is the SPY. This is the daily chart. And if you look at the market through, price, trends, you've got cycles, you've got sentiment, you've got money flows. It tells us whether you should own stocks or be out of the stock market. It tells you when trends are starting and when trends are ending. The right-hand chart here shows us the sentiment of the market of what people are thinking, doing, feeling, and where they're putting their money. And so we can see when the market starts to get ugly underneath, when you look underneath the hood of the market, you can be like, whoa, there's a lot of money flowing out. Big money is looking for safety. And it gives us this warning sign, and the market sells off. Well, we're back into these deep green bars on the top right-hand side here, telling us that money's still just pouring into the market, and investors have no fear. We got the VIX very low. We got the put call ratio that hit a really short a trigger yesterday, which was the 2nd of June, saying we should see a quick pullback. Might only last a day or three, but we're having all these little indicators telling us short term we're overbought. But again, the momentum here is so strong, you cannot fight this. I've been expecting the market to pull back for a long time, a big correction, but we're not getting it. And we just have to keep we buy after a dip and we ride it up until the next correction starts. And it's just kind of rinse and repeat at this phase. And you definitely don't want to fight this trend. You got to ride it and stick with it.
Interesting to look at it from that perspective. And because you mentioned the Iran war and the turmoil that that's creating in the market, I think one place that's especially evident is in the oil market. So I think I've got a 2-part question here when it comes to oil. Have you been involved in there? Have you been making any trades? And what is your outlook for the price? I've been hearing, even if this conflict wraps up, we could be looking at a period of higher prices moving forward. So how are you seeing it?
Yeah, so we're not in it right now. We did have a play with one of our portfolios playing XOP, which is kind of like the mining stock of oil. They're exploration stocks. So we did have a trade in that. We got in, hit our target, moved out. Since then, we've just been seeing oil move sideways. It's definitely in a big range. I mean, it is a landmine. We're not interested in playing anything here simply because one day you think things are going to get resolved. The next day, it's just as bad as it was, and everything's kiboshed again. So overall, this is a very volatile market. Not interested in taking part of it. I do think, obviously, the longer the Strait of Hormuz stays closed, the supply-demand issue is going to get even worse. And eventually, we could start to see oil here start to leak to the upside, like really start to run away with pricing. And I mean, if we start to see oil get up, up above 120, 125, we're probably going to see some pretty serious stuff start happening in the Middle East, maybe some more aggressive type of action, because this is already starting to hurt the pocketbook for, investors. It's high fuel pricing. All of this stuff definitely doesn't help the mining stocks, right? Elevated fuel pricing is one of their, huge costs, and instantly jumped overnight when all this started. So I think you need to be very cautious if you're in this space. It's all over the place. It is really volatile. So if you are going to take a stab at it, it has to be a small position simply because it moves really fast. And if you put in a big position, it can do a lot of damage. So when something is like this, news driven, and you're hoping every day you wake up in the morning that the news is in your favor. It's obviously not the type of trade that I like. I like to invest in something that there's an underlying tide. We ride the tide, let the overall time, carry price, not wait for some type of resolution or lack of news to cause a trade.
Yes, and this is going in exactly the direction that I wanted to. There's a lot of concerns about inflation right now. And in addition to that, the Fed's ability to actually fight inflation at this point. So I wonder if I can take your temperature on your overall US economic outlook at this point.
Yeah, I mean, I feel like, everybody you talk to is like, everything is just ridiculously expensive. How quickly price jumped for everything has shocked a lot of people, right? I do think we'd be entering more so into a recession. In Canada, I mean, the markets are fairly weak. If we didn't have this huge AI tech bubble spending like hundreds of billions of dollars, like injecting into the markets, creating all kinds of opportunities and money's being spent, I do think we'd see the economy struggling right here. But, when we look at what's going on with inflation, high oil pricing, it's definitely keeping the inflation up. If we look at like the 10-year note and we were to just kind of go back to the long-term picture of this, the monthly chart, I mean, we've definitely seen the falling rates find a bottom. They've actually put in a bullish chart pattern and they are showing signs that they are going to continue to hold up, or we're going to see rates continue to climb, which is going to wreak havoc on things. So I think inflation is here to stay for a while. I think rates are going to hold up for quite some time. In fact, I think they could get back up and maybe break and push that 5% mark on the 10-year. So there's a lot of pain coming, I think. And the economy and the rates, everything is going to just continue to struggle until something breaks in a big way. And we'll see eventually the equities markets have a cleansing event. But right now it's still a huge wave of money flowing into the tech space, dragging the markets higher. And it hasn't lost momentum yet.
So given your outlook there, can you talk a little bit about how you're positioned right now? I think we managed to cover a few things where the timing is either not right now or not so good at the moment. So how are you positioned?
Yeah, with my portfolio, I'm long the S&P 500, which is the SPY here. We're long the SPY ETF. We're also long the NASDAQ, the QQQ ETF. So that's where my portfolio is. We have hit some targets. We've scaled out of some of our position. But overall, we're long stocks. We have some money in cash. With one of our portfolios, our sector trading portfolio, we are long PBW, which has moved up very nicely over the last little while. It's had a very strong bounce to the upside. And it continues to show signs of strength. And we've got obviously problems in the energy space with the Strait of Hormuz and oil. So we are seeing clean energy. We're seeing solar ETF. These are starting to come to life and take place. So that's how we're kind of navigating this market. Overall, the way I see it is you're either long equities or you're not. And if you're not in equities, you're in something else. Could be bonds, could be a currency, could be cash, could be precious metals. But right now, our strategy and the money flows are saying equities is where the momentum is, where the money's flowing. So that's where we want to be. And that's how we're playing it.
Okay. So long equities, despite, this impending correction. So you'll wait to see the sign of that before you start to make a move out of that. Is that how you're looking at it?
Absolutely. We don't pick tops. We don't pick bottoms. We literally just follow the trends. And that's this strategy here. It tells us when the trend comes to an end. It starts to sell off. It tells us when a bounce turns into a rally, we can get back in. There is no trying to pick a bottom. There is no trying to pick a top. That is a more or less a long-term losing strategy. You might nail a couple, which is a terrible habit because you'll think you can do it. But overall, your best just to follow price. It's not about trying to pick a bottom. It's not about trying to get out at the top. It's about, moving with the waves through the markets and making sure you're surfing the overall tide in your favor.
Okay, good to get that clarity. I think we can wrap it up there now, unless you had any final points that you would leave investors with at the moment, things you might be watching closely heading into, I guess, the rest of the year.
Yeah, well, the sentiment has definitely shifted in the last couple of days or in the last week. just investors are it's starting to get very frothy. It's starting to feel a lot like the parabolic move in silver. It's a bit different in terms of the energy, but overall, we're starting to get into that feeding frenzy type of movement with market participants coming back in, chasing, all these stocks. You got like Micron Technologies, which is up like 1,500% in the past year and change, like just has gone absolutely parabolic. So the market activity is starting to draw people in. People are starting to think you can make quick, easy money, big return in the markets. And so that sentiment shift has hit a level where I do feel like we're on the cusp of a pullback. It might not be a major market top, but it could be a multi-week or multi-month pullback. And the fact that the dollar's been firming up and moving higher is another thing to be aware of. So that's what I'm keeping my eyes on, is market sentiment with our color-coded chart. We're telling us how confident people are. If that starts to weaken, then we'll start to have to be concerning about the markets rolling over. But the dollar is going to be a big player. If the dollar breaks 100, we're going to see the metals start to sell off, and equities most likely starting to roll over as well.
Well, great takeaways. Thank you so much for coming on to share what you see going on in precious metals in the markets. This was really useful, as always.
Thanks, Charlotte. Pleasure.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Chris Vermeulen with thetechnicaltraders.com.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.